Can you invest in ICICI Prudential Flexi Cap fund? Is this a good fund to invest? And all other mutual funds are having this Flexi Cap, and why ICICI is launching right now? This is what you're going to see today. And this is Ganesh Santuru, your stock market profit coach, author of the book Money Leaks. And today it's all about a new fund offer which has come up in the market, and it's all about ICICI Prudential Flexi Cap fund. Let's look at the fund. Before that, please click the subscriber button so that you will get lots of insights on mutual fund, stock market, and whole thing about unlimited wealth. So this fund, is it a good to invest? Let's look at the NFO period first so that you will know whether should you apply and you have enough time or not. NFO starts from June 28th in a couple of days until July 12th. You have the timeline to invest in this fund. So it's a long period of time. And how this fund operates and where are the assets they are going to invest in? Is it a large cap, multi cap? What is this flexi cap? Something new which is coming up in the market. For that, you need to know what is a riskometer, because many people say ask about is it risky, is stock market risky, is mutual fund risky, and in this flexi cap it's really risky. Just look at the riskometer. It is showing very high, right? Very high in the sense how? Because all equities are will be in the range of high or very high, and that is the reason they are showing this exactly, because flexi cap is going to be invested between large cap, multi cap, large cap, small cap, and mid cap. All three categories in a different combinations based on market conditions. That is the reason it is called as flexi cap fund. Earlier, there was something called as multi-cap fund, which has and now because of recategorization, SEBI has come up with a recategorization a couple of years ago. What they told us, multi-cap means 25% should be in large cap, 25% should be in mid cap, and remaining 25% should be in small cap. And remaining things can be in cash or derivatives or based on whatever the fund manager decides. So there is a fixed combination which is called as multi-cap fund. And flexi cap, there is a huge advantage, and the advantage is that if large cap is doing good, it can increase. If multi cap is if mid cap is doing good, that portion, mid cap portion, can be increased beyond 30-40%. The small cap is a need of the hour, in the sense like small cap is doing excellently good, it can be increased the portion. So you do you get the point? Based on the market condition, the fund manager can rotate everything. This is how all the funds were operating, I think, before the SEBI's recategorization scheme which came in. After this, what happened is large cap means only large cap, mid cap means only mid cap. That is how the fund has been recategorized. And that has created a huge problem for people who are in the in between combination of all funds put together, and they had multi cap and they wanted to change so that they want to launch a new fund. So certain funds, they just changed the name into flexi cap a couple of months ago, couple of years, in the last 1 year or so. But ICICI, what they thought is let's come up with a new fund called flexi cap, and they still maintain the ICICI multi cap fund. So this is the asset allocation pattern of ICICI, almost like almost if you look at just look at asset allocation pattern. The equity and equity related instruments are going to be 100 to 65%, and other equity and equity related, it's almost a broad category, but the point is from medium to high and low to medium, they are going to maintain cash whenever the market is very high. And that is, you need to be clear what will be the market condition, because should I invest in this NFO, because right now market is at its peak. That is what the talk is all about. And what can happen in the market by year end or next year, what nobody knows, right? And in this kind of conditions, they can hold most of the money, 35% of the money, in debt instrument. That is the advantage of investing in mutual funds. They know the mutual fund managers can decide on their own, and they will act, because we cannot hold on to our emotions and do. But these guys, they need to do, because it's the money of the people which they trust on the fund managers, and they are putting it. And this asset allocation pattern says that this is something interesting which you can follow, right? And almost the everybody and in most of the NFOs, the most common question is what is the expense ratio. So I thought, let me show the expense ratio, and for the first 500 crores it's going to be 2.25 percentage. And this is how people, just remember, it's really difficult to make a new people to invest in mutual funds, and distributors to do the role. And this is a regular expense ratio. And if you are going for direct, maybe your 0.5% will be the advantage. You may be getting it around 1.5 or 1.75%. That is a huge difference. And the next 250 and beyond the 1250 or 3000 crores, even a regular fund will be having almost just 1.6%. And you may be having a maybe a zero point 0.5 if you're going for direct. That is the difference ICC is going to give you. Just as and when this This fund is accumulating more assets. Just look at the expense ratio is coming down like anything. This is something like expense is coming down once the asset size of the particular mutual fund is growing like constantly over a period of time. So you should look at in that point expense ratio more than expense ratio. How about the fund performance? All these things you should focus upon. Let me show you a simple peer comparison of this fund, right? So the peer comparison, all these are in market for a very long time, right? Just look at DSP. This is a flexi cap category, and I just selected moneycontrol.com. In the moneycontrol.com, once you go to mutual funds, you can easily come to this section where you will have a comparison of all the funds put together. Focus funds means everything will be there, and I have chosen flexi cap because we have been discussing about flexi cap. Just look at this, no DSP flexi cap fund. This is a direct plan. Remaining everything or all UTI flexi cap fund. Just look at the 10 years period returns, 15.62, right? And Aditya Birla Sun Life Flexi Cap Fund 15.45 percentage, and Kotak Flexi Cap Fund it was 15.44 percentage, and this is the kind of returns this has given. And the 5 years Parag Parikh Flexi Cap has given 19%, almost 20%, and the next one is JM Finance 16.68 percentage, and Edelweiss Flexi Cap Fund at around 16 percentage. So this is the kind of returns, and even some of the above close to 18% is DSP, Canara Robeco, and UTI Flexi Cap have all done good. PGIM is also done good. So this is the kind of returns you can expect in a flexi cap fund in the long run, 5 years and 10 years, which is I believe is strongly very good fund to stay invested. So are you ready to invest in this fund? Choice is yours, right? I'm not this is a good fund categorization, and if you're not having flexi cap in your fund, you can invest. And if you're a first time investor, be cautious, and market is high, and stay sure make sure you are staying for at least 3 to 5 years for sure, so that you are getting a good amount of money, right? And it's a new fund offer, and you can go for SIP, you can go for lump sum investment also. So either way, stay invested for longer period. And this is a pure mutual fund. If market is going for correction or whatever in the next few months, within next few months or within next couple of years, it's better to have a good fund for a long time, and you will see a great amount of return. Thank you so much for watching. Please share this video with your friends so that they can also look at about whether investing in an NFO, and it can be for long term also, right? For retirement planning or your kids education or whatever, right? Thank you so much, and see you in the next video.